Welcome back to Money Mentor Zone. In episode 1, we learned what same day loans are and how they work. In episode 2, we compared 10 actual lenders operating in the USA. In episode 3, we did a deep dive on the three main types: payday loans, installment loans, and line of credit. In episode 4, we exposed the hidden fees lenders don't tell you about. Today, in episode 5, we are answering the question I get asked more than any other: who should actually use same day loans and who should stay far away? Because here's the truth: same day loans are not inherently good or bad, they are tools. And like any tools, they are perfect for some situations and dangerous for others. A hammer is great for driving nails, terrible for brain surgery. Same day loans work the same way. For one person, a same day loan might be the lifeline they need. For another, it could be the beginning of a debt trap that lasts years. So, how do you know which category you fall into? We are going to walk through real scenarios. We will talk about credit scores, income situations, and emergency needs. And by the end of this episode, you will have a clear framework for deciding whether a same day loan makes sense for your situation. Let's start with the most important question of all.
Do you actually need to borrow money right now? Many people rush into loans without exploring other options. Ask these 4 questions first.
Do you have savings? Can you delay the expense? Can your family help? Can you negotiate? Do you actually borrow money right now? Bank account is low, without exploring other options first. 4 questions to ask before any loan. Many rush to borrow without exploring other options. Take a moment. Ask the right questions first. Before you borrow, try these first: savings, delay, family, or negotiate. A loan should be your last resort. First, try using your savings, or see if you can delay the purchase. Talk to your family and negotiate. Do you really need to borrow? Many rush to borrow without exploring options. Ask these 4 questions first.
First, check your savings. Next, try to delay the purchase. Talk to family for help, or negotiate better terms.
The most important question: do you actually need to borrow money right now? Before you apply, ask yourself these 4 questions.
Here is something most borrowers don't realize: your credit score isn't the only thing lenders look at. In fact, many lenders consider a much broader picture of your financial health. According to Bankrate, lenders commonly look at 3 main factors beyond your credit score. Factor 1: your income and employment history. Lenders want to confirm that you have sufficient income to repay the loan. This usually means providing pay stubs like W-2 or tax returns. If you are self employed, they may want to see multiple years of tax returns. The key question isn't just how much you make, it's how stable that income is. Someone with 5 years at the same job looks less risky than someone who started last week. Factor 2: your debt to income ratio, or DTI. This is the percentage of your pre tax income that goes towards paying existing debts. Things like mortgage or rent, minimum credit card payments, auto loans, and student loans. Ideally, your DTI should be below 36%, even after adding the payment for your new loan. However, some lenders accept DTI of up to 50%. Here is the simple math: if you earn 4,000 per month and your existing debt payment total 1500, your DTI is 37.5%. Add a $200 loan payment and you are at 42.5%. Some lenders will approve that, some won't.
Lenders want to see liquid assets like savings, investments, and property. Secured loans can help you qualify, but there's a risk to your assets. Lenders want to see liquid assets like savings, investments, and property. Secured loans can help you qualify, but there's a risk to your assets. Secured loans help you qualify, but default means losing your asset. Secured loans can help with bad credit, but the risk is real. You could lose your collateral. Liquid assets like savings, investments, and property can be accessed quickly. Liquid assets and collateral are key to securing a loan. Using your car as collateral, default, and you lose it. Lenders want to see you have liquid assets like savings, investments, or property. Collateral like a car can help you qualify. It's not just your credit score. Now for real scenarios. It's not just your credit score. Now for real scenarios. We look at your income, assets, and debt-to-income ratio. With excellent credit, you're in the driver's seat, heading straight for the best rates and no fees.
Sophie is another excellent option for borrowers with good to excellent credit. They offer loans up to 1 lakh with no fees at all, and 83% of applications signed before 6 p.m. ET are funded the same day. If you are in the category, you have choices. You can compare offers, negotiate rates, and pick the loan that truly fits your needs. You should never accept high fees or predatory terms because you don't have to. The verdict: same day loans can work well for you, but only if you choose the right lender and actually needs the money. Don't borrow just because you can. Scenario 2: you have fair credit. Let's say your credit score is in the 600-700 range. Maybe you have had some late payments in the past or you just haven't built much credit history yet. This is where things get more complicated. You still have options, but they come with higher costs. Avant specializes in serving borrowers with fair credit. Most of their customers have scores between 600 and 700. They offer next day funding, but they do charge an administration fee up to 9.99% on the 5,000 loan. That's up to $500 off the top. One Mean Financial is another option for fair credit borrowers. They offer same day funding at branches and they will work with scores. as low as the mid 500, but their rates range from 18% to 36%, and origination fees run from 1% to 10% depending on your state. Here's the trade off with fair credit. You can get access to money when you need it, but you will pay for that access. The key question for fair credit borrower isn't can I get a loan? It's can I afford the payment? Before you sign anything, do the math. We covered in episode 4. Calculate the total cost, add up the origination fees, the interest, any potential late fee. Make sure you can actually afford the monthly payment. The verdict. Same day loans can work for fair credit borrowers, but only if you absolutely need the money and you are confident you can make the payments. This is not the time to borrow for wants. This is for genuine emergencies only. Scenario 3. You have limited credit history or thin credit. Maybe you are young, just starting out. Maybe you are new to the country. Maybe you have always used cash and never built a credit file. This is where technology can help. Upstart uses artificial intelligence to evaluate more than just your credit score. They look at factors like your education, job history, and other data points. If you have a good job and a steady income but not much credit history, Upstart might approve you when traditional lenders won't. Funding typically happens within one business day. According to Bankrate, lenders may consider your educational background and field of study because statistically, certain applicants are more likely to have steady employment based on their degrees. The US Bureau of Labor Statistics reports that income and job stability increase significantly with education level. So if you have limited credit but a solid job and a college degree, you may have more options than you think. But here's the caution. Some lenders target borrowers with limited credit by offering loans with extremely high rates and hidden fees. Always read the fine print. Always calculate the total cost. The verdict. If you have limited credit but steady income, same day loans from tech forward lenders like Upstart might work. But start small. Borrow only what you absolutely need and make every payment on time. This is a chance to build your credit, not destroy it. Scenario 4. You have poor credit. Let's be honest. This is the hardest situation. If your credit score is below 580, many traditional lenders won't work with you. One main financial will consider borrowers with scores as low as the mid 500. But as we have discussed, their rates go up to 36% and origination fees can be substantial. Another option for poor credit borrowers is a secured loan, using an asset like a car or saving account as collateral. This can help you qualify for better rates, but it comes with serious risk. If you default, you lose that asset. This is also the category where payday lenders target aggressively, and the Consumer Financial Protection Bureau has strong warning about this. According to the CFPB, if you take out a payday loan, you will likely be charged $10 to $30 for every $100 borrowed. That $300 loan with a $45 fee sounds small, but remember from episode 1, that's 390% APR. If your budget is already tight and if you have a poor credit, it probably is. Repaying that full amount in 2 weeks may be extremely difficult, and that's how the debt trap starts. For Poor credit borrowers. Here's my honest advice: exhaust every other option before considering a same day loan. Can you join a credit union and apply for a small loan there? Credit union often has more flexible terms for members. Is there a local community organization that offers emergency assistance? Can you get a cash advance from your employer? According to CFPB, some employers, non-profit organizations, and community groups offer advances or emergency credit. The verdict: if you have poor credit, same day loans should be your absolute last resort, and payday loans should be avoided entirely if possible. The risks are simply too high. Scenario 5: you are a freelancer, gig worker, or have irregular income. This is a special category because traditional lenders often struggle with borrowers who don't have a steady paycheck. If you are a freelancer, you know the drill. Some months are great, some months are lean. But to a traditional lender looking at a single pay stub, a lean month might look like you can't afford a loan. This is where cash advance apps like Earnin can be incredibly useful. They are not loans, they let you access money you have already earned but haven't been paid yet. No APR, no mandatory fees, optional tips, and small fees for instant transfers. And because they are based on your actual work hours, they understand irregular income better than traditional lenders. Upstart is another good option for freelancers because they look at your overall financial picture, not just a single pay stub. They consider your education, job history, and other factors. Remember lines of credit from episode 3. For freelancers with irregular income, a line of credit can be a great tool. You borrow only when you need it, pay interest only on what you use, and as you repay, the credit becomes available again. Sophie also works well for freelancers with good credit. They offer loans up to 100,000 with no fees, and they consider more than just your credit score. The verdict: if you have irregular income, look for lenders who understand your situation. Earning, Upstart, lines of credit. Avoid lenders who only look at a single pay stub without understanding your full financial picture. Scenario 6: you are facing a genuine emergency. This is the scenario same day loans were designed for. Your car broke down and you needed to get to work. Your water heater died. You have a medical bill that can't wait. The Consumer Financial Protection Bureau has clear guidance for this situation. First, consider alternatives. Even in an emergency, can you delay the expense? Can you negotiate with the creditor? Can you get help from family? If you have exhausted alternatives and truly need money today, here's your emergency checklist. 1. Borrow only what you need, not what you qualify for. According to financial experts, there is a tendency in uncertain times to take out an oversized loan to cover all possible scenarios. This is a trap. A larger loan means higher monthly payment and greater financial risk. Make a precise list of your urgent needs, add a small buffer of up to 20% and stick to that amount. 2. Compare at least 3 offers. Even in an emergency, don't sign anything before comparing options. In many cases, the difference between offers can amount to hundreds or even thousands of dollars. Compare APR, origination fees, prepayment penalties, and total cost, not just the monthly payment. 3. Read the fine print. I know you're in a hurry. I know you need money now. But the 5 minutes you spend reading terms could save you from months or years of debt. Look for origination fees. Look for prepayment penalties. Look for how many times they will attempt withdrawal if a payment fails.
Step 4. Verify you can afford the payments. Review your budget carefully. Check that all payments are manageable. Step 4. Verify you can afford the payments. Be honest with yourself. Can you really make these payments? Am I confident I can make every payment? If you're not 100% confident, this is not the right loan. Am I confident I can make every payment? Not so sure. This is not the right loan. Borrow minimally. Compare offers. Read fine print. Verify affordability. Step 4. Can you afford it? If the emergency is genuine and you follow the checklist, a same-day loan can work. Step 4. Verify you can afford the payments. Be honest about your budget. If not confident, do not borrow.
Now let's talk about who should stay far away from same-day loans. Category 1. Anyone who can't afford the payments. This sounds obvious, but it's the most common mistake. If your budget is already stretched thin, adding a loan payment, especially a high-interest one, can push you over the edge. Category 2. People borrowing for wants, not needs. A same-day loan for a vacation, for concert tickets, for a new TV. That's how people end up in debt for years. If it's not an emergency, save up and buy it later. Let's put this all together into a simple decision framework. You can use anytime you are considering a same-day loan.
Already have multiple loans?
Step 1.
More debt
Do you
isn't the
really
answer.
need
Using
it?
one loan to pay another
Have
traps you in a debt
explored
cycle. Read the fine print.
alternatives, savings, family, negotiation, delay? If yes to any alternative, stop here. Step 2. Can you afford it? Calculate your
Using a payday loan to pay a
DTI.
payday loan?
At
That's
the
the debt trap.
proposed
Stop.
payment.
Get help
If
now.
your DTI goes above 40 to 50%, this is too risky. Step 3.
Rushing to sign a
What's
loan?
your credit
Stop. The fine print
situation?
hides urgent fees. If you
Excellent
haven't read it, you're not
credit,
ready. No loan is that
light
urgent.
stream,
If you haven't read the
Sophie,
fine
lowest
print,
rates,
you're not
no
ready to
fees.
sign. No loan
Fair
is that
credit,
urgent.
Avant, 1 May, financial.
Remember
Accessible
episode
but
1?
costs
That's exactly
more.
where you are.
Limited
Seek help
credit,
immediately.
Upstart.
Remember episode 1? The debt trap.
AI-based
You tried to
approval.
escape with a payday loan but fell deeper.
Irregular
That's exactly
income,
where you are. Seek help
earning.
immediately. If you have
Lines
multiple
of
loans,
credit.
this is the sign you need professional help.
Poor
Credit
credit,
counseling offers a
exhaust
helpful guide. If you have
all
multiple loans,
alternatives
this is the
first.
sign you need professional
Step
help.
4.
Credit
Have you
counseling
compared
can
at
help.
least 3 offers? APR, fees, total cost, not just monthly payment? Step 5. Have you read the fine print? Organization fees, origination fees, prepayment penalties, NSF free policies? If you can answer yes to, I really need it and I can afford it, and you have compared offers and read the fine print, then and only then should you consider moving forward. Here is what today's episode is not saying. We are not saying you should never borrow money. We are not saying same day loans are always bad. What we are saying is know your situation, know your option, and never borrow without a plan. In episode 6, we are covering something I have been promising since episode 1: 7 alternatives to same day loans that won't trap you. We will talk about credit union loan, payday alternative loans, employer advances, family loans, negotiating with creditors, community assistance program, and building an emergency fund. These are the options you should try before you consider a same day loan. That's coming up next week. Subscribe so you don't miss it and comment below. What's your situation? Have you used a same day loan before? Was it the right choice or a mistake? Share your story so others can learn. I read every comment. Thanks for watching. See you in episode 6.